Hello guys, welcome back to a new episode. RALLYTOP Investing 3.2 SMC Masterclass here. Let me first of all wish every one of you out there a very happy new year and a peaceful year for that matter. This is the first video of RALLYTOP Investing in 2025. The reason why I'm making this video is to help someone out there to get himself or herself prepared for the year ahead in terms of trading. Now, I want to think that you need to break new grounds this year. You don't want to repeat the mistakes you did last year in your trading career. You need to find a way of breaking new grounds. And that is why this video is very important for somebody like you. But you will need to stick with me to the very end of this video to be able to understand every bit of what we're going to be discussing, because I'm going to show you a lot of setups, and each of these setups have their peculiarities of approach. You do not want to use one approach or one methodology to approach all the setups you find in the market in 2025. That's not going to work out, guys. The market is not a one size fits all. So you need to stick with me till the end of this video if you actually want to improve on your trading in 2025. Okay, with that being said, let's go straight into the discussion. Now, first of all, when you open your chart, the first thing you need is to determine the bias of the market, where the direction of the market on any time frame. Now, the direction of the market can be objectively determined by looking for the last break of structure. Where do you have the last break of structure? Of course, you know, without a break of structure, you don't want to enter the market as a beginner unless you are an advanced trader. Okay? So you need a break of structure, first of all, meaning that if structure breaks to the upside, you will have a fair idea that price is likely to continue in that uptrend. If it breaks to the downside, then you will have the same fair idea that price wants to go bearish. Okay? And so that's why break of structure is very important to any trader. Now, how do you determine your break of structure? The first thing is to look for your swing highs and swing lows. And how do you determine that? Well, we have lots of videos that we have talked about how to determine your swing high and your swing low. Now, as you can see on this chart, if I ask you what is the bias of the market, some of you will probably say we are bearish. Some will say we are bullish. In fact, some will even say we are consolidating. Okay? But you don't just look at the charts and then just conclude that this is the bias of the market. You need to actually determine some structures in the market. For instance, if you look at the left, you'll find out that just in this small area here, you have a high, you have a low, you have a lower high, you have a lower low, you have a lower high, you have a lower low. And then all of a sudden, something happened here. This lower low, instead of it to continue, price did something upward to take out this high here. So what happened there? Well, what happened there is this. Let me show that to you. This is my low. And for me to determine this my low here, I need inducement to be taken to confirm this low. And therefore, where is my inducement? This will be my inducement. Please make sure that your inducement is a valid swing. Okay? Either swing high or swing low. Make sure it is a valid swing high or low. Now, that is my inducement. So inducement has been taken out. That's why you see this move going up here. So once inducement is taken out, that means that my low can now be confirmed. And now for my lower high in this bearish structure to be confirmed, I need to wait for price to come and take out this low and close below it. And as you can see, that happened here. This low has been taken out with a candle closure. Okay? So therefore, my high can now be confirmed. So this is my valid high in the market. Okay? So now, we have determined our high, we have determined our low. Now, price continue to go down and has printed this new low. For this new low to be confirmed, it needs inducement. Remember, here we are bearish. It needs inducement. And so how do we determine that inducement? We need to zoom in for us to see clearly what is going on in the market. So as you can see, for this low to be confirmed, we need inducement. I know some of you will think that this is inducement here. This is not inducement, guys. Okay? These candles high and low are protected. All these are inside bars. So this is not inducement. This is not inducement either. This is not inducement either. So where is the inducement? You need to look for your correct swing high or low to confirm your inducement. So this becomes your inducement. Once that inducement is taken out, then this our low will be confirmed. So as you can see, inducement has been taken out with this candle wick. So our low now can be confirmed. Remember, this is our last lower high before this lower low. So if price travels back up to take out this last lower high and closes above it, that will become a chalk. Why? Because we are bearish here. And as you can see, that happened here. So let me zoom in for us to see. So now, look at our high is taken out here. And now once high is taken out, you need to wait to see what's going to happen next. It took it out with a candle closure. Now, to determine your new high, you need to wait for inducement to be taken. So this is not a proper high. This either is not a proper high. Why? It didn't take out an inducement. Okay, so price close above this high. So we have a new high in place. For this new high, we need inducement. And where is the inducement here? Well, the inducement that we need is still here. And now, it didn't take out an inducement, as you can see. And it created a new high. For this new high to be confirmed as an as a valid high, it needs inducement. This is my inducement here. And after then, price went up again to print a new high. For this new high to be confirmed, it needs inducement. So inducement can be transferred from here, to this point here. So as you can see, inducement was not taken out before price created a new high. Now for this new high, it needs inducement, and the inducement is still okay where it is now, and therefore we continue to advance price and see. So as you can see, price has taken out that inducement. So once that inducement is taken out, then our high can now be confirmed. So this is our range high. And now where is our range low? Now we need to identify our range low, because that will make up our trading range. So let's locate where our range low is. Let's see where our range low is. This is our range high. So this is our range low. So we have this trading range. Okay, this is where we want to look for our trades, because we are still bullish. Now the next thing we need to do is to identify our areas of interest. So where are your areas of interest? This is exactly the way I trade, so please follow me step by step and then you will understand. So where is your area of interest? Now as you can see, everything here is mitigated. We are looking for a fresh zone. Everything is mitigated, guys. Now take a look at this zone here. This is a fresh zone that we want to take our trade from, and that's it. It's known as our decisional area of interest. And after that decisional area of interest, let's look at other zones. Everything is mitigated, as you can see here, guys. Everything except maybe this one. This one has a bit of problems. This zone here has a bit of problem. What's the problem? Is this candle wick. And therefore, because of this candle wick, we can transfer this zone to this very singular candle. Now if we do that, there is still a problem, because this will become an OB, and your OB needs a fair value gap, an imbalance. Okay, and therefore to get that imbalance, we will need to now transfer that OB to this one here. this candle, even though it is an inside bar, okay, but make sure that your stop loss is just below this low. Okay, so that's the area of interest we are looking at to take this trade from. There are two ways you can take the trade. Either you take it from this area of interest, or you take it from this imbalance here. There is an imbalance here. Let me show you that imbalance now. There is an imbalance between this candle's low and this candle's high. As you can see, is an imbalance, which makes this zone a high probability zone. Okay, with that imbalance, I want you to understand that. So these are the two zones, but ask yourself, are you going to sit on your hands and wait for price to come all the way down to these zones before you take your before you take your trade higher? How are you sure that price is going to respect these zones? Are you sure that price will not blow through them and continue going downward? Do you want to be a spectator in the market? I don't think that is the right thing to do in 2025. So I'm going to show you the way that you can actually be part of this as price is going down. Now, as price is going down, remember, everything on the right hand side from now is known as internal structures. Okay, we want to trade the internal structures. We want to capitalize on the internal structures. And if you are doing that, then you must understand this pattern. You want to see a pattern like this: price going higher, okay, coming down, but fail to take out this low, and then goes back higher to take out this high, and after that price comes down to take out this low. Once that happens, when price is pulling back up, all right, this will be your area of interest, high probability area of interest to take your price lower. I hope you understand what I'm trying to say here now. Okay, meaning that, look, you want to see price take out this high, and at the same time price will come back down to take out the low that produced that high. Okay, and this now will become your high probability area of interest. Very important. So as price pulls back into this high probability area of interest, you want to go short from there. That's the first way. The second way is this: as price is coming down, all right, you want to see price take out inducement, and if it gives us any form of entry based on our trading plan, then we can take price lower. Simple. These are the two zones, the two patterns that you need to train your eyes to really catch here. Okay, so let me quickly show you that one now. So because we're going to be trading on the right hand side, we want to trade the internal structures. Now let's continue to advance price and see. So as you can see, price now took out this high. As you can see, it took it out with a candle wick, and after that price came down to take out this low, just like I explained to you in that diagram. It took out this low and has to close below it. Once you find that kind of scenario, once you find this pattern on your chart, please pull the trigger. And how do you pull the trigger? This becomes your area of interest, your high probability area of interest. Now if you want to refine this, you can refine it to this TNCP here. This is confirmed TNCP. Now you can actually take this trade directly on your 15M, but I will advise you as a beginner that always confirm your setups before you pull the trigger. Okay, direct entry can cause you pains in the market. So how do you confirm this market? You need to scale down to your 1M in this case. And now what do you want to do on the 1M? First of all, you want to see whether you can refine this 15-minute zone. And as you can see here, the only zone we can refine is this OB here. So if price comes into this OB, because this zone is small enough, but if you still want to refine, then you must refine to this OB here. Very simple. I'm sorry guys, I have cold. So that's our refinement. Now I want to say one more thing here. Look, as price is coming to tap into this zone, whether tapping into our 15-minute zone or this refined 1-minute zone, you need to wait for confirmation. And that confirmation I'm going to show you here. Okay, please follow me step by step, because in 2025 you don't want to be that loser trader always. Okay, so now let's continue. If we play price on this 1M, it's going to take time, so let's get to the 15 minutes and play price from there. Remember, we are taking advantage of this right hand side of the market. Okay, now remember, this is a low. Why? Price took out inducement here. Okay, inducement has been taken, so you don't need to wait for any inducement again, because already liquidity has been taken. Okay, that's why we're marking our area of interest here, so we can continue to play price. Once price taps into either this 15 minutes zone or this refined zone, we go back to the 1M and wait for confirmation. So let's continue. Okay, so price has tapped into this 15 minute zone. As you can see, the first time price taps into that 15 minute zone is here. So let's take price from there. So now we can go to the 1M and try to see whether we can have any entry opportunities here. Now, if we are going to have any entry opportunity, now that price has tapped into this 15 minute zone, we want to wait for chalk to be taken. And where is the chalk? Here is your chalk in the market, guys. Once that chalk is taken out, then we can take action. So let's continue. So as you can see, that chalk was not taken out. Rather, price printed a new high. It took out this previous high here, and therefore our chalk can now be transferred from here to this zone here. But it has taken out that chalk with just a candle wick. This is not a proper way of taking out chalk. We want to see a candle closure. All right, so once price closes below, then we can take action. And as you can see, price eventually closed below. Now we can take action. This is confirmed. Now take a look at this 3 candle pattern, guys. I've been talking about this 3 candle pattern for quite some time now. This is a powerful candle pattern that you need to study, to really understand very well. This is your confirmed TNCP, guys. This is your confirmed TNCP. So if price comes back into this zone, we want to take price lower. So we continue to advance price and see. Do we need inducement? No, we don't need inducement. When you are using TNCP, you don't need inducement, but you need to wait for it to take out the low that produce that high, okay, with a candle closure, not with a candle wick. And as you can see, that happened here. So let's continue to advance price. Now if you are going to be playing price on this 1 minute, it may take some time, so let's get to the 15M so that it will be faster for us. So this is the zone. We are waiting for price to come and tap into it, okay, and then we go short from there. Okay, so price has tapped into it. Let's get back to that 1M now. As you can see, price has tapped into it here, so we want to go short from here. We want to go short from here. Can you see the process I'm taking? Always do this, guys. Always do this. Very important for you to do this. Our stop loss just above. And where is our TP? Our TP, we want to go to the 15 minutes to look for our TP. Let's see. Our TP should be this low. That will be our ultimate TP for now. So we go back to that 1M and take our TP right down there, just like so, okay, and we continue to advance price. So now there is something here I want you to understand. On the 1 minute time frame, because we are still within 1 minute time frame now, this is a low. This is your break of structure here. Is it a confirmed break of structure? No, but this is internal break of structure. After that break of structure, you need inducement, and as you can see, inducement is taken out here. Inducement is taken out. Once inducement is taken out, where is your area of interest that you can go long, short from there? Here. So that's our zone. If price taps into it, we also want to take trade from there. So let's continue. Okay, so price has tapped into it, so we can actually frame our trade here to go short. Our stop loss just above. Our TP, where is our TP? Just where the other one is. Okay, that's going to be a very good trade if it goes our way. So we continue to advance price. Remember, let's get back to the 15M first of all. Remember, on the 15M, this is a low that we are targeting. So let's continue to play price on the 15M. Okay, boom, it has taken out that low. Okay, it has smashed our first take profit. Okay, now how do you manage this trade? The management of the trade is typically your own responsibility. There are two ways you can manage the trade. Once it takes out all the structural lows, you can move your stop loss to break even. That's one way of doing it. Or secondly, once it takes out the structural lows, you can close part of your position, all right, and leave the rest to run. That's the way to do it, guys. Okay, so now this is the 15 minutes. It has taken out this low, even though this low is not a valid low. Okay, it's not really a major low, it is internal structure low. So but we want to continue to wait for a major low to take place. Now this is a low here. For this low to be confirmed, it needs inducement. And where is the inducement here? Right now, this is where the inducement is right now to confirm this low. But let's see whether that will be the last inducement. We continue. Okay, so it didn't take out that inducement, rather it printed a new low. So our inducement can be transferred from here to this zone here. It can be transferred to that zone there. So if inducement is taken out here, where is our area of interest? Our area of interest will be this, from this low to this high. Let's continue to see whether it will go our way. Now it did not go to take it out. Our inducement is transferred from there to here. So we continue. Now a new structure has been created. A new structure has been created. This is our new high and our new low. Okay, so we can transfer our inducement to this zone here. So let's continue to play price and see what happens. And look at what is happening here, guys. Please always make sure you look at what is going on in the market. Look at this. It took out that high with a candle wick. After taking it out with a candle wick, look at this candle close below it. Why? What stops this candle from closing above this high? Why did it take it out and retraced on that candle and the next candle closed below it? Why? Something is happening here. This is your confirmed TNCP guy. So this is on the 15 minutes. You can now go down to the 1 minute and see whether you can get any opportunity to go short from there. And if you go short from there, where is going to be your TP? Your TP will be here. So we can scale down to the 1 minute now. Now, on the 1 minute, we want to refine this zone. Is there anywhere to refine? Look at it properly, guys. We can refine it to this one. We can refine it to that one. That's the last buy to sell. Okay, that's the first one. Now the second one is where this one is already mitigated. So unless we want to refine to this OB here, but this is an OB, remember, high probability is this. I think the 2 is OB actually. So that's what we want to see. So we continue to advance price and see what happens. Once price taps into it, we don't want to just go short. We want a confirmation. So let's continue. Now let's get back to that 15M. It's going to take a bit of time. Let's see what happens on the 15M. So let's continue. Okay, so price has tapped into the first one. Let's see. Let's take out price from here, because the first time it tapped is this one. It tapped into this one on the let's get back to that 1M. Please understand what we are doing here. So on the 1M, price tapped into it is still valid. This one is still valid here, as you can see. Now for us to be sure of what we are doing here, we need to wait for it to take inducement, to take a chalk. And where is the chalk? Chalk is here. This is your chalk, and it has to close below it. Once it closes below it, we need to wait for inducement. Okay, so we continue. So it has closed below it now. So where is the inducement here? There was inducement. And so where is your area of interest here? Your area of interest will be this one. Remember, we still have this reference zone here. So this is 50-50. This is low probability. Price can simply blow through it because of this zone up here. So we continue. Okay, so as you can see, it's still within our zone. We don't know whether it will go our way, so we can frame our trade from there. Our stop loss just above, our TP below where we placed the other ones. Our TP is right here. So we continue to advance price and see what happens. So as you can see, TP smashed. So we go back to the 15M. Always refer back to the 15M. So now on the 15M, let's see. This is our low. Now price has wicked below this low. Okay, it hasn't closed below. Now if another candle closes above this high, we want to take advantage of that. So let's continue to advance price. Okay, no candle close above. So we have this candle now, it's still wicking. Until candle closes below, we will not be able to do anything, because if we want to take advantage of this low, we need to look for inducement. And where is the inducement here? Inducement will be up here. So let's continue to advance price and see what happens. Can you see price is still going down? So you could have trailed your stops to follow price down. I hope you understand what we are saying. Now price has printed a new low here and a new high. So our inducement can now be here. This is our inducement in the market. So if price takes out that inducement, where is going to be our area of interest? Just a minute. Where is our area of interest? If it takes out that inducement, well, the area of interest will be here, guys. From this low, this is your order flow. Yeah, I think so. That's your order flow. Large one. Okay, large one. But we can refine it on the 1M. So we continue to advance price. And let's see. Remember, this is the zone we are coming. Okay, we are coming here. So we continue. Okay, so it has smashed our zone. So all our positions were targeted at this point. Okay, all these ones were targeted at this point. We have entered about 3 positions, this making it 3rd position. I don't know, where are the other ones? The other ones disappeared? No, they are here. They are here. Okay, 3 positions. All of them hit our TP. Can you see what we mean? This is crazy, guys. This is how to take trade in the market. This one would have given us how many? Would have given us 19 hours. This one would have given us 29 hours, almost 30 hours, because 29 hours 99. How about this one? This one would have given us 12.62 hours. Okay, coming down alone. That's the counter trend. Think about it. Now this is now going to be our major trend that we want to follow now. It has tapped into this zone, and for it to be confirmed, we need chalk before we take anything. So this is our chalk. Once price takes out that chalk, we need inducement. So we continue. Okay, so we need to wait. It has taken out chalk. So if it's going to go higher, this is what we are going to see. We want to see price at first attempt do this. All right, but if it doesn't do that, if we now find a pattern like this after breaking above this inducement zone, we now have a pattern like this. That means that this downtrend may be continuing. Okay, so let's continue to see what happens. Okay, can you see that? So where is our inducement here? This is our inducement. Okay, and where is our area of interest? This is our area of interest on the 15M. This is our area of interest on the 15M. Now, if price comes back down and taps into this our area of interest, we can go to the lower time frame and refine that area of interest and look for opportunity to go short if it gives us any opportunity. So let's continue to advance price. Can you see what is happening there? There was no opportunity at all. It just sliced through. So we couldn't have taken any trade here. Now, price has closed below this low. I hope you are paying attention to what I'm doing here. It closed below this low here. All right? Now, let's look at this, guys, from here. Don't you think that price wants to retrace? I think so. It wants to retrace. Okay? And therefore, we want to take advantage if price is pulling back. We want to take advantage of it. But before we do that, where is our inducement? Our inducement is here. Our inducement is here. Now, if you go to your lower time frame, look at this massive, the number of pips here, massive candle here. Why don't you go down to your lower time frame and see whether you can take price higher to this zone? Okay? Are you going to sit on your hand until price gets to this inducement here? It's too much. So let's get to the 1M and see what is happening. Now, this is the 1M. Okay? This is the 1M. This low. For this low to be confirmed, we need inducement. And look at the inducement here. Remember, this is your 1M inducement. Your 15M inducement is still here. This is your 15M inducement. So we want to see whether we can take advantage of price. If price is pulling back, as you can see, it's showing you a sign that it wants to pull back. Okay? If it's pulling back, then we will really make some good money here, because this is a price magnet. Your higher time frame inducement is a price magnet. So let's continue. So now, if inducement is taken out, then we know what to do. Let's continue. Okay, boom. Inducement is taken. The 1M inducement is taken, as you can see. So what do we need here? Like I told you before, it closed above. We want to see some bullish sentiment happen here. What I mean by bullish sentiment is that after price close above, on first attempt, you want to see price go back higher like this. That's what I mean by bullish sentiment. Okay? Now, so let's continue to play price. So instead of giving us a bullish sentiment, what did it give us? It gave us a bearish sentiment. 1, 2, 3 pattern going down. Take note of this. Look at it. Price, okay, did something like this from this low. Now price went up, okay, went up, printed this low and went back higher. That's a bullish sentiment. But later it printed this low, did 1, 2, 3 pattern to the downside. So what do you want to do? This price want to sell. It didn't give us any bullish sentiment to go higher. Okay, so we continue. It shows that the smart money is not ready to push price higher just yet. Okay, now so we continue. If this is going to be the last low, we need inducement. And where is the inducement here? Well, your inducement would be here. Let me see. Yes, this is going to be your inducement right here. That's your inducement to confirm this low. So we continue. Oh, we have gone too far. There is something I want you to look at here. Very important. I've been talking about this 3 candle formation for quite a while. If you have been following me, you will understand. Okay? Now, the low of this middle candle took out the low of the previous candle with a candle wick, and this next candle close above. This is known as pin bar. This is the kind of pattern you want to look for on your chart. Once you find that, guys, this is high probability candle patterns that you need to really master like the back of your palm. So this is your zone. You want to take price higher to where? To that first of all, this 15 minutes inducement, this 1 minute inducement. All right, after that you want to take it to this 15 minutes inducement here. Can you see? So let's see what happens. Let's continue to play price. So as you can see, price has tapped, has mitigated this zone and it's going higher. So if we frame our trade from here to go higher, where is going to be our TP? Where is going to be our TP? Our TP will be up here. Where? Let me see. The first TP will be here. Don't make mistakes about it. Your first TP will be here. Once it closes above here, then you can do one of two things like I told you before. Then your ultimate TP is here. All right? So our stop loss will be just below here. It's going to give us about 8.34 hours. Okay, which is completely fine. So let's continue to advance price and see what happens. I hope you are following me. That's why I told you at the beginning that there are various setups and they are with various approaches. So price is going in our direction. Let's see. Let's get back to the 15M so that it doesn't waste our time here. Let's get back to the 15M because we have wasted too much time here. Remember, our target is still here. This is our target, our ultimate target. Remember to trail your stops because price can't do anything. I hope you understand. Okay. This is still our target here. Remember? Our target is still here. Okay? So we continue. Boom. Can you see that? Neat. This is the way for you to analyze the market, follow the steps systematically, and then you'll be amazed at your progress in 2025. But if you want to learn more of this, if you want to really learn more of this style of trading, then you can join our VIP community. The doors are open because this is a new year. We are giving an incredible discount to our mentorship fees. So we give 65% off. 65% off. That's crazy. All right? That's crazy. So you've got to pay only $35 for our mentorship for life. Just one-time payment. And it's closing on the 17th. Don't sleep on this. Don't sleep on this. Take advantage of it. And if you are yet to join our YouTube channel, please do so just immediately and turn on the notification so that anytime we publish a new video, you'll be notified about it. All right, guys, I see you in our next video.